Good afternoon, everyone. Thank you so much for being here. This session is called Dealing with Tax. If you feel you've made a mistake, gone to the wrong room, do not leave. You will definitely enjoy this session more than any other of this conference. I guarantee it. This session is first and foremost about designing both tax and justice systems to maximize the rights, protections, and prosperity of taxpayers, okay? And from there, though, each of us on this panel takes important and interesting directions. One of us, I think, is concerned about how we tax. Designing a tax base properly can be beneficial economically and administratively. There's one of us who seeks to create new principles to redefine the fiscal relationship between the individual and the state so that the individual is once again sovereign and the state is properly limited. There are two of us on this panel, yours truly and Ken, who seek direct reforms to structure tax enforcement itself into a better system, one that has more oversight of the authorities who are given vast powers at taxpayer expense. And all of us really are aiming for a system of administration that puts taxpayers first. That's the unifying theme here. So what I'm going to do is introduce all four of the panelists, starting with myself. I'm Pete Sepp, president of National Taxpayers Union, nonprofit, nonpartisan citizen group celebrating our 50th anniversary this year, which makes us nothing but pikers here in Australia, given your 100th anniversary. But one of our biggest focuses over our history has been taxpayer rights legislation, increasing the protections that citizens have when dealing directly with tax authorities. Dan Mitchell, sitting directly next to me, is currently the president. He also co-founder of Center for Freedom and Prosperity, but interestingly, Dan grew up in Connecticut, and I think when you left to pursue your degree at University of Georgia and then on to George Mason University, that was pretty much the beginning of the end for Connecticut. Yeah, that was all. Dan's also worked on the Senate Finance Committee, Heritage, and Cato Institute, very important organizations in the United States. I'd urge you to go to the website freedomandprosperity.org to read many of Dan's works about extraterritorial tax enforcement, some of the best things you'll read out there about governments reaching across their borders to enforce tax laws. In the middle there, we have Ken Phillips. A taxpayer advocate's effectiveness is best judged by how often and how angrily tax authorities denounce you. And that means Ken is doing a fantastic job here in Australia. He is co-founder and executive director of Self-Employed Australia, and he serves as an advisor on the board of advisors for Australian Taxpayers Alliance. He has exposed numerous horror stories about the Australian tax authorities' treatment of small business taxpayers, and in turn he caused what was called the agency's annibus horribus last year. He's helped thousands of taxpayers with problems with the Australian Tax Authority, called a warrior for the little guy in the Australian Financial Review. In the words of our own warriors, the U.S. Marines, we have chewed a lot of the same dirt together, sir. Christopher Lingle is on the end there. He is a fellow attendee of the University of Georgia, actually, now a visiting professor of economics at Universidad Francisco Marroquín. Oh, not bad, not bad. Okay. Scholar and fellow at institutions in New Delhi and Colombo and Brussels and here, man all over the world who has done a lot of work. I would recommend among Chris's several books, not only Singapore's Authoritarian Capitalism, that's very often cited online, but he had a remarkably prescient book, The Rise and Decline of the Asian Century. My favorite, an essay Chris wrote entitled Apartheid as Racial Socialism. Excellent piece of work, just excellent. So why don't we start with Dan's presentation, and we'll move right down the line, and I'll provide a few remarks myself. Please.
Okay, so all I do is, all right, thank you very much. What I want to do is first give you a slide that I forgot to include yesterday if you were at that, 2 days ago. This is what I think our fundamental problem is with fiscal policy and why tax competition is so desirable. As a kid in the United States, almost everyone has a goldfish at some point in time, and you're told, whether it's true or not, that if you can actually feed a goldfish to death. And so you're told to sort of be very careful about how much food you put in the tank. Well, I think governments behave the same way. If you don't put some sort of check on their greed of the political class, they're going to tax and spend their economies into oblivion. We see that in Greece. We're about to see it in Italy. Of course, we see it in a really radical way in places like Venezuela and North Korea. I had one other slide I meant to include, and I didn't. When I was talking yesterday about all the evidence about low taxes and small government, I forgot to mention that the IMF and the OECD and some of the other international bureaucracies are actually making a counterclaim. It used to be the left was honest, and they had this Arthur Oaken equity efficiency trade-off where they admit it. Okay, you can sacrifice some growth and you can redistribute some income to make society fairer, at least in their perspective. Well, now you have these international bureaucracies arguing, oh, no. You actually make an economy stronger by increasing taxes and spending. And so I did a little visual where I showed like a guy, a bank robber, but I of course labeled him as a politician with a bunch of money. And then that was the first image. I won't tell you the second image. The third image was more growth, more prosperity, unicorns and whatever. And then in the middle, I wrote fairy dust, magic beans. I mean, it really is amazing that they're making this argument now. But let me go ahead and get right into my presentation. I want to start by underscoring the importance of economic growth. This just shows you how many years it takes to double your GDP at different growth rates. So if you're Italy or France, 1% growth takes you 70 years. If you're a hyper-growth economy like Hong Kong or Singapore, you can double your GDP in less than 20 years. Growth matters. And let me give you a tangible real-world example of this. This shows the orange line, US per capita GDP. The blue line is Mexico per capita GDP, and the yellow line shows what would have happened if the US, beginning in 1895, simply grew 1 percentage point of GDP less per year. Now, if you're only planning on living 1 year, if your economy grows 1 percentage point slower, you probably might not notice that. But over year after year, decade after decade, you get this enormous compounding effect. Growth matters a lot. Now, 1% a year, that's a lot. I admit that. So let's look at a more modest example. And this is just US data starting this year and going into the future. If we simply grew 0.2% faster in the United States, by the time you got out 25 years, you'd have an additional $4,500 of income per capita. And the cumulative increase in per capita GDP would be well north of $50,000 a year. In other words, growth really does matter a lot. That's why we fight on these. We also fight because we're libertarians. We don't like government holding guns to our head and taking our money. But I'm talking here as an economist, and this is why we care about these things. Now, I want to focus on the tax base. That's really my message here. And I showed this chart yesterday in the context of tax competition, and I showed how if you save and invest your after-tax income, you have all these extra layers of tax. But admittedly, that's a little bit complicated, especially when I go up to Capitol Hill and I try to educate politicians in Washington about this. And so I've come up with a better way of explaining the importance of the tax base. I tell them to imagine that their job is running an apple orchard. They can understand that. Tree, apples, So I tell them, okay, imagine you bought some land, you bought some saplings, you planted the trees, you tended the trees, you fertilized the trees, and finally, after all these years of tying up your money in this potentially risky investment, you had a crop of apples. And they can understand that. It's not very complicated. And so then I tell them, how do you harvest the apples? Do you pick them from the tree or chop down the tree? Well, it's easier probably to harvest the apples by chopping down the tree. But what happens? You don't have any apples next year. And so if you go back to the previous slide, that's what all these extra layers of tax are. We're not technically chopping down the tree. We're really sawing branches off the tree, but we're reducing the economy's capacity to generate future income, which is why, the way to think about it is the tree is capital, the apples are income. If you must, and I don't like it, but if you must, tax the apples. Do not tax the tree as well. But let me now put it in the context of designing a tax system. We have this big debate in the United States between a flat tax and a national sales tax, which is sort of a more direct version of a GST or value-added tax. And here's what you really need to understand. All three of them, you earn a paycheck. With a flat tax in the current system, you pay tax, then you have after-tax income. The difference between a flat tax and the current system is if you save and invest your after-tax income, you have all these additional layers of tax, whereas with a flat tax, you're only taxed once when you first earn your income. Now, here's what a lot of people have trouble understanding. The tax base in a flat tax is the exact same as the tax base in a national sales tax. The only difference is that a flat tax taxes your income one time at one low rate when you earn it, and a sales tax taxes your income one time at one low rate when you spend it. Some of the tax is when you consume your after-tax income right away, and some of the tax is when you consume your after-tax income in the future. Because what's saving and investing? It's simply future consumption. And so the goal should be, and by the way, a value-added tax would also, and it depends whether it's a credit invoice VAT or subtraction method VAT, so I didn't bother including those examples, but the goal should be to have what public finance economists call a consumption-based tax. But I actually don't even think that's the right way to describe it. It's simply an income tax system where income is defined correctly. Unlike the modern system that we have in so many countries, it's called the Hague-Simon system, which taxes income and net worth. We want to tax only income and only tax at one time, and that's what you get under a flat tax or national sales tax. Now, it means faster growth, but it also means administrative simplicity. Because if you are taxing income only one time when it is first earned in a flat tax, or if you're just simply taxing consumption in some sort of sales tax, guess what? The government has no need to know the timing of your consumption patterns. It has no need to know anything about your assets. Because once you earn money, if you start then investing, there's no additional layer of tax. Unless, of course, you're generating additional income, and then that would be taxed. But you're not being double taxed simply because you are saving and investing. And this is important, because every economic theory, even socialism and Marxism, they all agree that saving and investing is key to growth. So what you want, if we go back, what you want is to make sure that income that is consumed today and income that is consumed in the future are treated equally. And that means you can't have all these additional layers of tax that we have in so many modern systems. Hong Kong doesn't have all those additional layers of tax, and I don't even know if Australia has double taxation of dividends, but in the US we have all those 4 layers of tax. Some countries even add a wealth tax on top of it. And what you're doing is basically punishing saving and investing, which again is the seed corn for future economic growth. Why do politicians do that? Oh, because bad rich people have saving and investing. Let me just say something about the Laffer curve since you're a captive audience, because this is a design issue, but it involves some microeconomic analysis. What happens when you raise the tax rate? You get more money, right? But what if people don't earn as much income? People respond to incentives. So if you're trying to determine the change in a tax rate on tax revenue, you have to figure out 2 different things. What's happening to taxable income and what's happening to the tax rate. And this is what the Laffer curve looks like. And by the way, every single economist, even Paul Krugman, agrees with the Laffer curve. They all agree that at 100% tax rate, you're probably not collecting much money. Maybe you have a genetic communist like Chris, and he'll continue to work and pay money to the government just because he loves government so much. But most people would agree at 100% tax, the government collects almost nothing. Well, at a 0% tax, you're collecting nothing. Everyone agrees with the Laffer curve. Where they disagree is where's the revenue maximizing point. I put it at about 30%. Paul Krugman says it's about 70 or 80%. But you know what? I don't care about that debate because never once in my life, I'm not like Chris, I never wake up and say, how can I maximize revenue for government? I don't want to do that. I want to minimize revenue for government. I'm much more concerned about the growth maximizing point. But that's not the reason I'm sharing this. I'm sharing this because I'm going to show you some data from the IRS. Every year, that's our tax police, the Internal Revenue Service. Every year they put out something called the Statistics of Income Bulletin. And it's a very rich set of data. You can't actually see what an individual taxpayer paid or anything like that. But you can look by income class, the sources of income, the types of deductions and credits you utilize. And if you look at people making more than $200,000 a year, in 1980, there were about 117,000 of them. They reported $36 billion of income to the IRS, and Uncle Sam, the federal government, collected $19 billion of tax. This was when our top tax rate was 70%. Well, we'll call that lingo land. Reagan said that's too high, and Reagan, in 2 steps, reduced the top tax rate all the way down to 28%. Chris was upset. The American people were happy. But what happened to revenue? Remember, 70% tax rate, $19 billion of revenue. Tax rate comes down to 28%. Did revenues fall proportionally to about $8.5 billion? Did revenues fall to $15 billion? Did revenue stay the same, $19 billion? What do you think happened? Again, these are not my numbers. You can go to the IRS website today and confirm all this data. In the 1988 Statistics of Income Bulletin, what do we find? We had a lot more rich people. We had almost 10 times as much taxable income, and the government got 5 times as much tax. Now, I want to be fair here. Was that all a Laffer curve effect? No, of course not. We had some inflation, we had some population growth, there were other free market reforms that Reagan was making that probably would have led to more taxable income and more rich people, but there's no question that that was a Laffer curve example in a very strong way. Now, by the way, I want to emphasize very few tax cuts actually collect more revenue. This one did. Most tax cuts lose revenue, but they don't lose nearly as much revenue as the static models that the governments use would indicate. And so it's very important. Yes, we want to get the tax base right. Yes, we want to have tax rates low. The Laffer curve evidence is pretty strong on that. And in theory, if we go back to the Laffer curve, is this actually wonderful. In theory, honest left-wingers should not want to be here. When we're here, they should want to get to the revenue maximizing point. That's where Chris wants to be. I want to be down here. But if you're a left-winger, here's the question. Do you hate rich people more than you like having revenue to finance bigger government? And that's actually a serious question because there has been polling data in places like the UK where they asked Labour Party members, would you want higher tax rates on the rich even if revenue did not go up? And they said yes, by overwhelming margin. So there are some genuinely spiteful, bad people in the world. Look, I only have a couple of minutes left, so I just want to make one other point. We can't ever have good tax policy unless we solve the spending problem. A lot of people say you have to solve the spending problem with the balanced budget amendment. No, they don't work. Instead, the goal should be to have some sort of fiscal rule saying that the government over the long term has to grow slower than the private sector. I named it after myself because I'm so jealous of Art Laffer for having a curve named after himself. But I want to show you, hey, here's IMF data. I went through the IMF's World Economic Outlook database, and I found multiple examples of countries that for multiple years had government growing less than 2% a year, and what happened is the burden of government spending fell as a share of GDP, and deficits fell as a share of GDP. But the key thing to understand is the deficit is the symptom, government spending is the disease. You want to control government spending, in effect, you cure the underlying disease, and guess what? The symptom goes away. If you have a brain tumor, do you want the doctor to give you aspirin? I mean, maybe you do. Your head probably hurts. But that's very secondary compared to, well, operate on me, get the tumor out of me. Sort of like a tumor, maybe like having Chris live with you or something like that. You want to get rid of it. Hong Kong, Article 107 of their basic law is a spending cap. Hong Kong is a great economic success. Switzerland, by referendum, adopted what they call a debt brake, but it's really a spending cap. Amazingly successful economically. And by the way, I'm not going to read these things out, but even the IMF and the OECD have done various studies where they show that spending caps are the only fiscal rules that work. European Central Bank has done the same thing. Lots of scholars have looked at these issues very closely. Balanced budget amendments don't work. The new Morrison government should do some sort of Hong Kong Swiss-style spending cap. I guess, if I understand correctly, in Australia, you have to have a vote of the people to change the constitution. See if that works. Because the advantage of it, if you actually do it, it is successful. And we can't say that about a lot of things that we ever try to do. So there's the roadmap that we have. Identify the problem, big government. In other words, we want good tax policy. We're never going to get it without smaller government. So we have to bend the cost curve down of government. And of course, it's a libertarian group. That means we have to convince people liberty is better than dependency. Thank you very much.
I'm going to give you a case study. It's fair to say that the taxing authorities have the power, in any society probably the greatest power of all, and they have the power to be the most oppressive or the most fair of all. So I'm going to look at the Australian Taxation Office, look at the situation with the Australian Taxation Office, then tell you what we're intending to do with the Australian Taxation Office and why we need to internationalise this particular issue. I'm going to throw at you a whole lot of facts, which I'm not going to put up there, but that's what I'm going to talk about and take you through each of those subheadings there. So just to describe to you, we let you know that we describe the Australian Taxation Office as a dictatorship, and the reason for that is the following. All power to collect taxes is vested in Australia in the Taxation Commissioner. It's vested in that particular person. The Australian Taxation Office administers the taxation system for the Taxation Commissioner. So when the Tax Office raises a debt against you, the debt is not an alleged debt. It is a debt that becomes a debt at law the moment it is raised, and it is due and payable on the spot. The ATO doesn't have to prove the debt. There is no obligation for the proof of that, and the ATO only has to form an opinion that you have a debt, and that debt becomes immediately payable. The ATO has the power to require payment of that debt before appeals. They can charge penalties of up to 70%. They have the power to raid people's homes without a warrant. They can forcibly take, known as garnishee, money from your bank account and third parties who may owe you money. They only have to form an opinion that a person has committed fraud, and that opinion of fraud then becomes actionable by then again against you. They can sell your home and they can bankrupt you without you doing anything at all about it. If you seek to appeal any of this process, your appeal is principally to the ATO itself, and you, the person, must prove that the debt is not owed. The ATO does not have to prove its case, and it doesn't have to prove its case to itself. Any appeals that go beyond the ATO to the courts are expensive, technical, legally technical, drawn out, and legally stacked against you, and I'll explain that why. If the ATO has conducted defective administration, in other words, if they have botched up what they have actually done, and we've got plenty of examples of this, your appeal on the defective administration is to the Taxation Office itself. The Taxation Office decides if they have conducted defective administration, and if you are owed money as a result of that, they will decide if there should be compensation and how much that compensation should be. The ATO, if there is internal corruption, it is the ATO that investigates its own internal corruption. So the ATO's powers exceed that of any police force in Australia. Taxpayers are guilty until they prove their innocence to the ATO. And believe it or not, if you read the ATO website to decide what to do and how you should behave as a taxpayer, nothing on the ATO website is law. Everything on the ATO's website is the ATO's view of tax law. So it is a dictatorship in any thing. So what we have sitting in the Commonwealth Public Service is a body which in actual fact is a dictatorship sitting inside our alleged democracy and the rule of law. Where do the courts interface with all of this? Well, essentially, all the ATO, all the courts really are empowered to do is to review the framework of the Tax Commissioner's judicial power. So essentially, if the legislation says that the ATO can behave in a particular way, the judiciary look at this and say, well, look, yes, well, that's what the law says, so that's what it is. And I'll just give you one very specific example. There was a lady who the ATO said owed her a lot of money. They raided her house, took a whole lot of documents away from her house. She went into court saying that I don't owe you any money, and you have documents that demonstrate and prove that I don't owe you any money. The Taxation Office said, well, look, it would be far too onerous to require us to produce those documents. The court agreed with the ATO. In 2001, the then Chief Justice of Australia, Murray Gleeson, in a speech, posed a hypothetical. He was talking about the rule of law. And he posed a hypothetical about a taxation collection body that had the power to just discriminately decide how much tax they took from you. And said, well, look, here we give the Taxation Office to decide, look, we might tax you at 5% or 3%, and you, Tom, over there, will tax at 20% or 90% or whatever it is. So the Chief Justice, then Chief Justice of Australia, asked a question. That would be a tax. But would it be a law within the meaning of a constitution which assumes the rule of law? Now, what the Chief Justice, Murray Gleeson, at that time then did, in our view and our experience, is very accurately describe the powers of the ATO, very accurately. And if I can ask here in this audience from Australia, anyone who recalls seeing last year, April last year, the ABC Four Corners program, Mongrel Bunch of Bastards. Is there anyone who saw that? Right, it was the ABC. ABC doesn't have a good reputation in these sorts of areas, but I've got to tell you what, they were heroes. I've been stirring on this issue because I do lots of case studies. I have lots of people come to me, we triage their cases, I refer them off to lawyers and accountants and so forth to try and save them. Lots of people that lost their houses, all this sort of stuff, and I've been taking this sort of material to the media for a long time. Last year, 2017, the Four Corners took an interest in what we were doing and did a fantastic job, an absolutely brilliant job, and a 1-hour expose interviewing people who had been financially raped by the ATO and just gave their stories. And this had a profound impact. It just took off. And the ATO during the rest of 2018 had just an enormously terrible year in terms of the media coverage. There's only one thing that the ATO fear, and that's adverse publicity. Anyway, that all continued across all of the media sections, TV, radio, right through 2018. It's unusual for a campaign to run that long. And so we wound up with a whole string of government reports, parliamentary reports and so forth, all concurring that what the Four Corners show had said was absolutely accurate. I've been pilloried under parliamentary privilege since 2016 on 4 or 5 different occasions in Senate hearings by the ATO attacking me for me exposing what's going on. I take great pride in that. So everything that's come out has confirmed the bad treatment by the ATO. So just to give you some quick things, each year the ATO garnishes about 50,000 people. In other words, forcibly takes the money from them without necessarily proving that the money is owed. They act on its opinion of fraud and evasion. In Australia, if you need an Australian business number to operate a business, and the ATO controls those, and it takes those away from people, and it moves to close down whistleblowers. The most high-profile whistleblower at the moment is a Richard Ball, who we're trying to assist and doing all sorts of things to work with him on. And he blew the whistle on the ATO on their maladministration and their breaching of the law over their garnishee processes. And Richard is now up on charges. In South Australia, it's illegal to record a phone conversation with someone. If you do that in Queensland, it's quite legal. But on the basis that Richard was in South Australia If he is convicted on all charges it is against, there's about 40 or 50 of them, he'll spend 163 years in jail. So the ATO is out to get him. And they do this to all whistleblowers. We claim and allege and believe, and I think the evidence is quite clear, that the ATO regularly delivers misleading information to Parliament and to the government of the day. It flouts its model litigation obligations, and it creates fraudulent documentation to prove debt. Now, I don't say that lightly because I have clear evidence of it. And when there is a proper organisation, independent organisation that can investigate fraud within the ATO, we will be producing that evidence. So when I say fraudulent documentation, I mean concocted fraudulent documentation. We've discovered what the ATO's modus operandi is. It's quite simple. Most people who get into strife with the ATO generally owe some money. There are quite a number who don't. But they get this concocted claim against them. Most people do owe money. So if you owe the tax office, say $40,000, what they will do is a standard procedure that we've now worked out. They will inflate that by adding interest, which they now charge 9% in an interest rate environment of 1.5%. They then add all of the various penalties onto the top of the whole thing, and they will concoct and allege and seek to demonstrate additional debt on top of what you actually owe. So they will move a $40,000 debt and then claim $150,000 against you. And then, of course, you go into apoplexy over all of that, and then they'll turn around and say, look, we'll settle for 90. And that's the primary process that they carry on with. And they get away with that on a consistent basis. All this is not subject to any oversight at all by the Parliament. It really goes away. Very quickly go through. The ATO now want to extend their powers. There are plans in front of the Parliament for this, which are rather interesting. So there are bills available that are going to be sought to be moved through. Bills that would remove legal privilege in your relationship with your lawyer. They would increase penalties from 70% to 200 and 300%. They would introduce a director's identification number, which means that all directors of companies will have a number which can be taken away by the ATO at their whim. They want to turn the ATO into a criminal enforcement agency. They want to introduce a reverse onus of proof for criminal offences under the Act. They want to introduce double jeopardy so that you can be charged twice for the same offence. They want to compel information from third parties. They want to impose non-financial penalties such as automatic travel bans and revocation of passports, and they want wide access to metadata. Now, all of that would be without any oversight by the Constitution, the courts, the Parliament, the government of the day, or the people. There are necessary reforms that need to go through, and this is what we're now campaigning for. We want the ATO broken up into two. Essentially, the ATO is nothing more than a police force, a financial police force. As a general rule, the police force have to prepare a case and take it to the Department of Prosecutions. The Prosecutions Department say, no, look, you haven't done a good enough research job, go away and do your job again. So at the moment, the ATO do both the assessment and the prosecution, and we want that split into two. I'll tell you what, they're not going to like it, but that's what we want. We want the Tax Commissioner position to be removed so that it operates under a board arrangement similar to ASIC, the ACCC and so forth, so that the CEO is answerable to a board. We have huge praise for the Morrison government, who moved on our suggestion to introduce a small business tax tribunal. We want that now secured through legislation. We want transparency required in debt and prosecution management, garnishes to be impossible without judicial oversight, capping of penalties, judicial oversight of ATO actions on its opinions of fraud, strengthening of the Minister of Appeals Tribunal, and so it goes on. So we've got a package of reforms. Now, for us to achieve that here in Australia, we want to take it global because the tax authorities communicate globally and operate globally. In August, I'm going to London to spend a week with people in London who have similar problems with the HMRC, the taxing authority in the UK. Different circumstances, plays out in different ways. But recently in the UK, the HMRC, the tax office there, sneaked through Parliament a controversial retrospective tax known as the loan charge. This taxes people, back taxes people over the last 20 years. It's already led to several reported suicides and a very high profile case. In other words, the May government is mad. It's not just over Brexit, but they're crazy over this because they're just doing whatever the HMRC there want to do. And so I've already talked to a number of people here at the conference. It's been a really terrific exercise for me. We need to take this international. We need to get the central themes. There's the theme, taming tax dictators. The dictatorship of the tax authorities must not continue. They must operate within the rule of law, and there's a very simple principle here. The taxing authorities must take from us the amount of tax that we are legally required to pay, not the amount of tax that the taxing authorities bully us into paying.
I'm going to do some virtue signaling here. And when I saw that Dan Mitchell was on this program, I jumped on a plane at considerable cost of time and money so that someone could make sense out of all the things that he gave you that was confusing. So I'll do my best, but he's muddied the water so much, I'm not sure what will happen here. But my approach is going to be more, not exactly metaphysical, but it's more of an academic approach to the issue of tax policy, beginning with a critique of what we know as the mainstream approach to tax policy as it's taught in public finance textbooks and most courses. I've used the Schumacher reference here that tax policy is though people really matter, because what we discover, and it's quite clear that the ATO is not interested at all in the humanity as humanity per se. It's just looking for a collective pool of assets, and they don't care who is bloodied in the process of getting it. My email address is there if you're interested to have these slides. So the first step towards clarifying the mess that Dan made, where's the, which way do I play?
No, you've got the light, you're on the light.
There we go. Okay. Dan even messed up the...
It's an IQ test, he failed.
So where do we start with tax policy? Well, there's a couple of viewpoints here, and this really starts with the viewpoints on the relationship between the individual and the state. So the first one, of course, is as the world as we live in now. You don't have first claim to your income, your wife or your husband. The state has first claim to your income, and if there's something left over, okay, they don't mind, you can have it, okay? Now that's not the way it was meant to be. The other approach, which many of you might find more congenial, but which threatens the ATO and ITS, is that citizens have the first claim to rightfully earned income. And we then accept the existence of a state in order to promote our individual welfare. But we've lost sight of that basic idea of the relationship between the citizen and the state. Now, within the economic or the public finance community, economists are greatly at blame for this, I believe, because what we find is that what we have now, the sort of mainstream conventional view, is that we elevate the collective over the individual. That is, the government has first claim, and the individual is sort of like a milk cow. They just take what they need from milk. Now, so they need to maximize revenue for the state. And economists do this a great deal. We talk about broadening the tax base and tax efficiency, so reducing the cost of raising a certain amount of tax. And this is for the benefit of the state. And we are seduced, perhaps, by these kind of statements. Taxes are what we pay as a cost of living in a civilized society. Now, this is a very interesting minimum. It's often not challenged. Now, the other perspective is that we elevate the individual over the collective. And that's where I stand. Dan's confused about that, as you can see. But individuals should be allowed to engage in voluntary trade, and this was what leads to the best use of resources. So we really do care about the community. We have to take care of the individual. The other thinking is really confused. It's incoherent as a concept, because it's as though, using ATO logic, It's as though if you want a good forest, you don't have to really worry about the condition of the individual trees. That's just sort of incidental. Well, that's incoherent. The idea here is if you want to have a healthy community, you have to take care of those individual trees so that there's more money to steal, if you like. I mean, the way I distinguish what we call in the U.S. banana republics from really good kleptocrats is that in banana republics, they steal from poor people. But a good kleptocrat encourages economic growth so there's more for them to steal. And so we got a response to this. And I think behind every meme there is a very deep argument. This would be something most of you would accept, but I like this one better than the Oliver Wendell Holmes. And I think it is, but on the face of it, it has no more content than Holmes offered. So let's go see how we got here. Now, let's start with a thought experiment. What was the reason for moving into this thing that we call I'm speaking mostly about representative democracy. Why did we do it? Well, the great thinkers, the more modern thinkers about this, understood that we needed this transition from monarchy, where rule was arbitrary, the rule of man, that we needed to, in order to promote and protect human liberty and develop a more harmonious living situation, we needed to move away from this arbitrary arrangement under the rule of law. So the rule of law is basically and essentially that everyone is treated equally before the law. This is what the Magna Carta was beginning to develop and communicate, that the rich are treated the same as the poor, the powerful the same as the weak, the government, God forbid, government officials are held to the same standards of evidence or culpability for their actions as much as the citizens. Okay? And taxes were understood only as a mechanism to provide what we call collective consumption goods, or maybe economists might call it public goods. Those things that it could be arguable in some cases that the market might not provide or would provide insufficiently. So this was the main purpose of democracy and the main purpose of taxes. It's all off the board now. 21st century democracy is an extension of the 20th century, where we had relentless growth of government by any measure. Employment as a proportion of total workforce, whatever. So what we need to understand here is that this expansion of political power has led to less liberty, and as Dan really got one thing right, also is associated with low economic growth. So we're punished on two sides here. This is not well communicated, certainly not within, I think, certain elements of the economic profession might address this at different points, but in the discussion of public finance, this seldom comes up. The real threat in our lives is not economic power. Nokia is powerless, although it was once powerful. I suspect Apple, as long as they keep going the way they are, is going to be the same. Economic power is constantly contested, it's transient, it disappears. They cannot use force. Political power is permanent. It's hard to contest. They can use force. They can stop you from contesting. We need that to communicate that threat much more effectively, and the left seems to be much more effective in convincing people, but there's no power other than political power. That is, again, what the idea of the rule of law was, to address that. Now, taxation became an instrument of redistribution. It's not what it was meant to be. Every piece of legislation is about assigning privilege through redistribution. Every piece of legislation, as it is now. So I would argue that every piece of legislation and almost every parliament is violating the rule of law. Because it's assigning a privilege, giving university students subsidized education, whatever it may be. So this whole concept, we need to challenge this on an almost metaphysical level. because we've moved from where taxes were understood simply as a mechanism for the community to develop things that we can all benefit from without privilege, to something that modern representative democracy is nothing more than a redistributional game. Now, how did we get there? Well, I go back to the 19th century. Adolf Wagner came up with something that's known as Wagner's Law. Now, Wagner, his perspective was what I call a macro orientation. I'm not referring to macroeconomics per se, macro in the aggregate or collective sense, okay? So he was looking at the collective. And this is the beginning, and unfortunately, this is where mainstream economics went. They kept that macro orientation when it came to tax policy. Now, my hero is Knut Wicksell. Wicksell didn't have to hang around and wait for Laffer to be born. Wicksell understood these same kind of problems that Laffer finally articulated in a very nice graphical way that made great sense and communicated to politicians who are not very bright anyway, something that they could understand. Now, Wicksell had what I would call a micro orientation, that is, on the individual. Okay? So let's look quickly here. So Wagner was, and this is not a law in any sense, although it's referenced as one. There's no economic theory behind it. It was just an observation and an assertion. He said, well, when people get richer, they want more of all things. Well, they also, oh my God, 5 minutes. They want more state. So he said, okay, how do we do this? How do we make it work for the state? So the modern economists have kept this. And the consequence is they are creating these problems with redistribution. They view, as a consequence of this, taxpayer behavior as exogenous. Tax reform should be neutral. You expand the tax base, forget about spending cuts. And that, this is kind of where we are now. Wicksell, Wicksell was concerned about justice. He said, look, we need to find a way to get government provision of goods and services as close as possible to market transactions, because only market transactions can be deemed just. A market transaction being voluntary, the two trading parties think that the transaction was both fair and just. That's the best measure of justice that I can come up with. I'm not a philosopher, but it's a good indicator. And so Wicksell is concerned with maximizing citizen welfare. The modern public finance approach is maximizing public sector welfare, make it easier to raise taxes or to collect taxes or whatever. And Wicksell went into another element here. He said you shouldn't have to pay for what you don't think the government should provide. So I don't like imperialistic wars of aggression that the United States is fighting, but I'm forced to pay for them. Now, Wicksell built the taxpayer into his analysis. So the taxpayer is endogenous into this micro orientation. Wicksell tried to create this argument on how do we make the tax system legitimate. I mean, under Wicksell, you wouldn't have to say taxation is theft. It's theft because you're being forced to pay for what you don't want, and you're being forced to pay for more than you receive in return, and you don't see value added in it. Under the Wicksell regime, it would be closer to a market transaction. You say, okay, that's fair. Okay, now, so taxes approximate what you pay. Now, one way to do this was to reduce as much as possible the provision of goods and services to a user fee or a toll. And this is a nice one, that if you're a net contributor, you get money back. And this is a just system. So Wicksell also saw clearly and insisted that redistribution is not what governments are in the business of. That should be left to voluntary organizations. And I think this is an important point. So Wicksell was covering a lot of ground. So in order to constrain governments, following this Wicksell approach, is important. Now, Wicksell also gave us some interesting insights into the emergence of the informal sector of economies. He realized the Wicksell equilibrium is an idea that if people think they're overtaxed, they'll cheat the tax rate down. That is, they'll go off invoice until they get the tax rate that they're effectively paying what they think is fair. And this is part of what maybe the appeal of the flat tax is. I mean, let me give you some interesting appeals to authority of the flat tax. The servants of God, at least as expressed by the church, believe in a flat tax. In the Christian community, tithing is a flat tax. Imagine if the church demanded 25 or 50%, the confessional lines would be out the door, or people would leave the church. They find they've become evangelical, for God's sakes. In the Islamic community, they have zakat. It's a flat tax on wealth, 4%. Okay? They don't charge people different rates. So if we follow this Vixel approach to taxation, this will support what Dan was talking about yesterday, and you'll hear it more clear here, that tax competition will be motivated at a much higher level, so it would force governments to move towards the lowest sort of tax rates. This is a way to halt the growth of the welfare state, and here's an example. Dan didn't bring this one up, but the Republic of Georgia, which now calls itself Georgia, they have what they call the Economic Liberty Act, and they introduced some very interesting limits on the state that... Okay, so thank you. I've ran out of time.
Well, a wonderful set of presentations, and we can come full circle on the question of the Georgia Economic Liberty Act, in that the nation of Georgia also has one of the most effective taxpayer ombudsmans in the world, and the ombudsman's office serves to mediate disputes between taxpayers and the tax authorities. Excellent system. So I would just make a few remarks here before going to questions, that picking up on what Ken said, that there are obviously a number of common experiences going on in nations around the world in the way people interact with tax authorities. We need to address them in a comprehensive manner and learn from each other. Very clearly, I think we can start focusing on a few principles here. One thing is clear, in that too much authority to not only investigate but also to adjudicate and impose penalties is vested in one part of government, one agency of government. That the power has to be diffused to the point where, if you have evidence gatherers, enforcement agents, and prosecutors separated, they essentially begin policing each other, checking each other. Prosecutors can say, you don't have a strong enough case, go away. Enforcers can say, you're not paying enough attention to the real areas of evasion in a tax system. They essentially not only compete with each other, but become rivals against each other in a very healthy way. Also, we need to start thinking of tax systems in the sense that we do other justice systems. Where's the public defender in all of this? In many systems, you have public defenders who will take the cases of people who are too poor to afford a lawyer. We have something like that in the United States in the form of the National Taxpayer Advocate's Office. That's a branch of the Internal Revenue Service, but it's formally walled off by law, protected from influence and interference by the tax authorities themselves. The advocate now has the power to issue something called a taxpayer assistance order, which would essentially forbid the IRS from engaging in illegal or problematic actions that could deprive a taxpayer of all their resources. Doesn't always work very well. We have serious problems with it, but that's the beginning, I think, of a tax system that has good separation of powers. You also need oversight that's effective outside of the executive branch and outside even of the legislative branch. We had a model in the United States called an oversight board. meaning officials from all branches of government as well as the private sector, attempting to ensure that our tax agency kept following not only its strategic plan, but the laws themselves, failed. We need to come up with another model, and we're actually working on that in the U.S. Congress. I would welcome any suggestions for oversight from any members of the audience. Positive experiences from other countries would be very helpful there. We also obviously need to involve the tax practitioner community more effectively and more regularly in not only policing how the tax agencies act, but also which laws are unenforceable or impossible to administer. One suggestion has been you have a regular process every 3 to 4 years where the tax community and public officials get together, go through the tax laws line by line, evaluate the tax administration procedures point by point, come up with recommendations that are then put into legislation that the legislative authority has to vote on, up or down. That's been a long-standing recommendation. Also, as Ken was pointing out, whistleblower protection laws are key when it comes to policing not only tax agencies, but the entirety of government. Very few governments or other organizations, even NGOs, have been able to make progress on ironclad whistleblower laws, but we have to keep trying. So I would say, just to close quickly until we get to questions, let's pick up on what Ken said when it comes to gathering the experiences of other nations and having regular contact so that we can all learn from each other and hopefully raise the bar on tax administration and taxpayer rights around the world. We've gotten a great start with the International Conference on Taxpayer Rights. Talk to me if you'd like more information on that. But the citizen group and advocate community has to be more involved in that process.